Hello, I'm Tom McRae. This is Counting the Cost on Al Jazeera, your look at the world of business and economics. Sanctions relief, releasing frozen assets, and billions of dollars for reconstruction. That's part of an interim agreement between the US and Iran to end their war. But could a final deal transform the Iranian economy? At the heart of it all is Iran's economic engine, oil. A final pact could also reopen trade, investment, and financial links. Would that reconnect Iran to the global economy? And what would it mean for the rest of the world? An economy already in ruins, now battered by months of a war with Israel and the US. For decades, Iran has been one of the world's most heavily sanctioned countries, cut off from global trade and finance and forced to sell much of its oil through shadow networks. But an interim deal with the US could change all of that. Frozen assets would be released, oil exports could surge, and hundreds of billions of dollars could be directed towards rebuilding the country. If a final deal is reached and if it holds, that could mark the biggest economic opportunity in years for Tehran, with ramifications for oil markets, energy prices, and the global economy. But can a country weakened by isolation, war, and years of mismanagement and corruption seize the moment? Imogen Kimber reports.
It was a much-anticipated deal, with weeks of back and forth. That's the interim agreement that officially ends the war between the US and Iran. Although, it's only the beginning of the final negotiations.
During a 60-day period that begins immediately after the signing of this Memorandum of Understanding, we must work on the details related to implementing parts of this document and on two very important issues, sanctions relief and the nuclear issue.
The MOU says the US will drop Iranian sanctions that have been crippling Iran's economy for decades. Sanctions won't be removed straight away, but the US will issue an immediate waiver on oil and petroleum exports. Before the war, Iran was selling around 2 million barrels per day. That dropped to approximately 250,000, causing a loss of up to $150 million daily. Iran will also get access to their frozen assets. They're in multiple overseas locations and are thought to be worth over $100 billion. And Tehran will get $300 billion for the reconstruction and economic development. It says damage is worth around $270 billion. Iran agreed to end the blockade of the Strait of Hormuz for 60 days and not charge for passage.
Yesterday was a very, very good day. We made a lot of good progress. We did exactly what we wanted to do, which is accomplish four things for the American people. First, we wanted to build a mechanism for keeping the Strait of Hormuz open. It is open. We've seen, of course, gas prices and oil prices come down, millions and millions of barrels of crude and natural gas flowing through the Strait of Hormuz that weren't flowing before. But we also wanted to make sure that we actually set up the coordination mechanism so that we could demine the Straits of Hormuz.
But Iran's chief negotiator said something different.
When the strait is to be controlled, it means that it needs to be managed. We have responsibility and sovereignty over there. Naturally, there are services there, and in return, there is a fee for this work.
And after 4 days, it once again closed the strait. Tehran said due to Israeli aggression towards Lebanon. The US also agreed to the removal of its naval blockade to be complete within 30 days.
What this does is it allows the ships to go. If we keep bombing, those ships won't be going. And you're talking about $500, $600, $700 million a day. It's a lot of money, a lot of money. That's why the world is okay. It's liquid, it's fine. Also, we run out of reserves in about 4 weeks. You know, there are reserves all over the world, and we would really run out. And there'll be a time when you wouldn't be able to get it. And you want to see bedlam?
The closure of the strait disrupted global energy supplies, drove up oil and gas prices, and slowed growth in the world economy. And the war worsened Iran's already flailing economy, causing inflation to soar over 70% and 2 million job losses. So Iran and the world stand to benefit from the MOU. But for Iran to reap the benefits, it needs to ensure a corrupt system doesn't engulf an influx of funds. And it needs to re-enter the global market, which has been cut off from for years. And all of this depends on whether a final agreement is reached, 60 days from when the MOU was signed. Imogen Kimber, Al Jazeera, for Counting the Cost.
Well, despite sanctions, Iran is highly dependent on its energy sector. Iran has around 10% of global oil reserves and shares the world's largest gas field with Qatar. A decade ago, Iran was the world's fifth largest oil producer, making nearly 4 million barrels a day. In the 70s, it produced more than 6 million barrels daily. The nation mostly consumes its gas production, while the oil sector accounts for up to 20% of Iran's GDP. But it's 80% of Iran's exports and the main source of foreign currency. To circumvent US sanctions, Iran has been selling oil via shadow fleets. The main buyer is China. US and Israel carried out attacks on Iran's energy infrastructure, including depots in Tehran, the South Pars gas field, and Iran's main crude oil export hub, Karg Island. The damage is estimated to be worth up to $58 billion. Let's bring in our guests now. We're joined by Nara Habibi, a professor of practice in the economics of the Middle East at Brandeis University. He's in Copenhagen. We're also joined in Los Angeles by William Lee. He's the managing director at Global Economic Advisors, a financial consultancy firm. He's also a former managing director at Citigroup. And from Riyadh, we're joined by John Safkianakis. He's the chief economist of the Gulf Research Centre. Thank you so much for being with us here on Counting the Costs. We really do appreciate it. Nada, if I can begin with you, if we can take a step back, give us some context to what we're dealing with right now. The war has piled fresh damage on Iran's economy that was already battered by decades of sanctions. Can you just give us an idea of what it looks like today?
Sure, my pleasure. Yes, so Iran has been a target of sanctions for more than 4 decades. And these sanctions intensified after the first round of President Trump's presidency. So even before the start of the current war, the economy was under significant pressure, partly because of the sanctions, especially financial sanctions, and partly because of economic mismanagement and bad economic policies. And when we talk about being under pressure, what people experienced was inflation rates in the range of 30 to 50%. The status of the middle class was declining. Already there was plenty of evidence that people were falling from middle class towards lower class, losing real purchasing power. Production was disrupted by all kinds of financial sanctions and also the disruptions on the government's oil revenues. So that was before the war started. With the war, the pressure of sanctions intensified, and there was significant damage to the productive capacity of the country. Some basic industries, such as steel, such as petrochemicals, which are very important for Iran's exports, were damaged severely. Now statistics shows that some of Iran's largest steel production units have suffered up to 50% and some even 60% loss of production capacity. Right. So on top of all the pressures of the sanctions, now you have additional unemployment and loss of income because many basic industries and many downstream industries that rely on output of basic industries, such as small businesses, have suffered and the jobs have been lost. Right. The condition is so difficult that people even have difficulty providing basic food necessities and medicine for themselves.
Yeah, we heard in the story at the top of this program, 2 million people have lost their jobs through the war. But William, this could all be about to turn around depending on the final details in the deal and if it indeed holds. We're talking about frozen assets being released, Iran connecting back to the financial world. What does that actually involve in practice, and potentially how long could that take?
Well, let's remember the MOU is an agenda. It's an agenda for the cessation of fighting. It's an agenda for getting money freed up, but it's not a treaty. And it's going to take the hard negotiations, especially about the key issues of the nuclear materials, the ballistic missile program, the whole network of affiliates, non-state affiliates that have been wreaking terror throughout the Middle East. Those issues are to be negotiated over this next 60-day period. So we have a situation where we have some partial relief. The world has gotten its supply chains, I hope, back in order, as we will see, in terms of the traffic in Strait of Hormuz. And that uncertainty has certainly toned down the price of oil to below $80 a barrel now. And that's going to be great relief, especially for countries in Asia that are so dependent upon the traffic in the Straits. As far as the longer term money is concerned, global investors are still hoping that the discussions will lead to a lifting of sanctions on a statutory basis. President Trump has put in place some relief in terms of executive actions, but executive actions can turn around on a dime, and that depends upon the state of negotiations. So there's still a lot of uncertainty right now, and the release of money is certainly going to be welcome in Iran. The unemployment rates are huge, as we just heard, but that also is a function of what the government is doing, and right now there's a lot of uncertainty even about who is in charge in Iran. And so I think the geopolitical uncertainty, economic uncertainty, financial uncertainty, they're still there, coming down in terms of temperature. So I like to think that the weather reports are volatile. They can change on a dime. But the economic climate is something that is what global investors will respond to. And a lot of the big money will be coming into Iran once the climate is more certain.
Yeah. Well, just sticking with the economic climate, John, you're in Riyadh. Gulf states have spent decades operating with a heavily sanctioned Iran next door as a neighbour. How does a potential Iranian economic revival, if it does get there, how does that fundamentally change the region, do you think?
Well, it depends on the stability of Iran. The same question is often asked about Syria and Lebanon, when a lot of Gulf countries, if not all of them, have been asked to invest in places such as Syria. The issue is the infusion of capital, of investments, will help the Syrian economy, but for how long will stability exist in Syria? And the same goes for Iran. And I think that the road, just to add to what William and Nader said, is that the road ahead is quite bumpy. We have to overcome these hurdles that will take more than 60 days to solve. And the question for Gulf investors, if they do so invest or look at Iran, is what are the prospects for Iran's regime stability? Will it be this regime or another regime? What will be the political stability, therefore, of Iran, the economic stability of Iran? We're still at a very early stage. So the $300 billion of funding that possibly will go one day into Iran is still an illusion rather than a reality.
Yeah. Nader, I want to bring you back in on this, talking about the instability for so many factions of society in Iran going forward. If a final deal is reached, do you think a country that has been weakened by isolation, mismanagement and corruption as well, how does it seize the moment? How does it take advantage of the potential that could be here?
Well, I think the immediate action of the government would be to bring some relief on the very immediate pressure that people feel in terms of loss of income and really loss of income for even basic necessities. And that can happen by the restart of imports. Keep in mind, for the past 2 months, Iran has not been able to not only export oil, but also to use whatever resources it has to import basic necessities. And the economy depends on imports for food, for medicine, and for some inputs for some of the industries. So the fact that with the start of these negotiations, the sea blockade was lifted is a major relief. This doesn't mean that the economy would be restored to strength, as was mentioned by other guests. That will take several years, and even the progress would be slow because of domestic political instability and even ideological disagreements within the regime. My expectation is that whatever money becomes available would really result in some relief for the people within a few weeks. But that means simply the economy would go back to the difficult conditions before the start of the war last June. It doesn't mean that there would be a recovery to a high level of prosperity. Not only that, but repair of all the industries that have been damaged during the bombardments will take time.
Yeah, and $58 billion is some of the reported costs just to the oil and gas infrastructure. One of the other issues, Iran is estimated to have more than $100 billion in frozen assets around the world. It's mainly oil revenues and foreign currency reserves in banks abroad, largely in countries that purchased Iranian oil, including Iraq, China, Japan, India, South Korea, and Luxembourg. The US Treasury Department can block financial institutions from the US dollar system if they violate sanctions. And like the majority of global oil deals, Iranian oil has been bought in dollars. So the majority of the assets become stuck when US President Trump reversed President Obama's nuclear accords and reinstated sanctions back in 2018. William, I want to talk about the timing for this. What do you make of what we're hearing out of Switzerland so far with some of the potential lifting of these sanctions? Why now? And what's been the response there in America?
I think one of the things that are going unreported right now is how much China has been in on the picture. As you say, a lot of the transactions, global transactions in oil are done in dollars, but China has been offering under the table deals with Iran, and it's been the major purchaser of 90% of Iranian oil exports, but they're paying in renminbi. And renminbi is not an international currency. And so really Iran is in a difficult position as having China being its sole purchaser of oil and at a discount, no less. So that I think the kind of relief that we should be seeing now is that finally Iran can sell oil freely at global prices to anybody who wants to buy it. Those are the immediate dollars that will be coming into Iran, and trade associated with that opening up the Strait of Hormuz will also improve life there. That's what we expect out of Switzerland over the next 60 days. But in terms of longer-term relief, the longer-term access to all of the other assets that are frozen, that requires legislation. And that is beyond the power of any president and requires Congress to sign on. And right now, there's a lot of hostility in Congress about the nature of the deal and how there's really no substantive change within the Iranian government. So there's quite a lot of opposition, I think, not only in the United States, but globally, because of the uncertainty as to where the government is going in Iran.
OK. John, one of the most ambitious and least defined elements of the agreement that we've seen, the MOU, is a proposed $300 billion reconstruction fund involving foreign companies, including firms from Arab states, to support Iran's reconstruction. What do you make of that? How do you see that working?
Well, I think, as I said before, it is still something that conflates to an illusion rather than a reality, because it will depend very much on the landscape in Iran. And what Nader said before is very much in agreement with what I'm thinking right now. The regime is at its weakest after the war. This is the weakest point of the regime, and in the ensuing months, is going to be quite fragile. So we need to wait and see what is the situation of the regime, political stability, that is. Secondly, what exactly are we going to receive in terms of offers? Where will those funds go? The big question is some of these funds could go into IRGC economic areas of development. The economy of Iran is majorly held by the military and the IRGC. So where will the money go, the funds go? And that interdependence between the civil and the military is very much what defines the Iranian economy today, as, for instance, in the case of Egypt. So it's very important that the funds will go into the rightful areas. Secondly, we need to see who is going to commit towards that funds. So it's not easy to produce $300 billion to be invested in Iran, especially when the Gulf is trying to diversify its sources of prosperity outside of the oil environment. So everybody in the region would want to see returns rather than lofty goals of money going into an Iranian economy that has no end to its difficulties and crises.
Right. Well, when it comes to the frozen Iranian assets, Donald Trump says they will only be able to be used towards buying American goods. This is exactly what he had to say.
We're doing very well in terms of negotiating a fair and reasonable deal. One of the things that we are doing also, and it came up last night, is money that's being unfrozen is going to be used to buy food, and the food's going to be bought exclusively through the United States from our farmers. And corn, soybeans, all of the things they need are going to be bought from our farmers. So our farmers are very happy. I've had a lot of calls. They were very happy about this.
Well, since speaking there, he also posted on Truth Social. In that post, he said, the money and or sanctions that the US Treasury is releasing goes into escrow controlled by the USA and will be used for the purchase of food and medical supplies exclusively from the United States, including corn, wheat and soybeans from our, quote, great American farmers. He went on to say, these are things that are desperately needed by Iran. This is a humanitarian crisis, and I feel it is necessary to help now before it is too late.
The frozen assets will be released in line with the national interests of Iran. This will be decided by Iranian officials. All in all, we are not faced with any restrictions on how to channel these funds. The assets will be used with absolute liberty by Iran in order to purchase whatever goods or commodities are needed by the nation.
Now, if I can bring you back in on this, Trump's essentially there saying it might be your money, Iran, but you're going to spend it how we tell you to spend it. Will being dictated to by the American president, how is that likely to go down within Iran?
It would be very difficult for the regime to openly admit that they have agreed to this condition. And indeed, just a few hours ago, the spokesman for the foreign ministry announced that Iran will use the resources to the best of its own interest. It's interesting that he did not categorically say, no, we will not buy from the United States. He was trying to be diplomatic, but also saving face by saying that Iran would look into the best prices and the best available options in terms of purchasing food and agricultural products. I think this is one of the points that both sides are going to negotiate. But keep in mind, there is a strong incentive for both Iran and United States to avoid another conflict, especially around the Strait of Hormuz. So I think they will try to find a face-saving measure at addressing these issues. And one must also keep in mind that President Trump makes many statements, but down the road, he's likely to change his statements again and again.
As we've heard. I want to move on to the Strait of Hormuz. William, Oman and Iran released a joint statement a short time ago saying they are committed to ensuring safe passage through the strait, stressing the sovereignty of both countries. And they went on to say they want to hold talks with regards to any related future costs. How is that going to work, and how big an issue do you think this is going to be going ahead? Not for negotiations, but from a global perspective, from the world's economy perspective, because we know the damage that has been wrought by the closure of the strait.
Well, that's the result of Iran having opened up Pandora's box. The Strait of Hormuz is international waters, and that is not subject to the control of any country. The United States has gone out of its way over its entire history back to the 1800s of ensuring free passage in international waters. And that is something that I think the world requires. And if the countries around the Strait of Hormuz believe that they can close it off and declare it to be territorial waters, that's going to be a subject of major discussion, and a lot of countries will be objecting to that not just the United States. So I think that is going to be a huge source of uncertainty. And if discussions go in that direction, I can see them breaking down very rapidly in Switzerland and going nowhere. So I think the restoration of safe passage in international waters is a maritime principle, which has to be restored and guaranteed.
We're almost coming to the end of this discussion. John, if I can bring you in finally, if the deal does come to pass, that the frozen assets are released, oil exports potentially could surge, hundreds of billions of dollars invested in Iran. I mean, that's obviously not just a good thing for Iran, but what would it mean for the rest of the global economy, do you think?
Well, I think that an inclusive Iranian economy in the wider Middle East, Gulf, and world economy context will be a very positive asset. Of course, as Iran increases its oil production, that adds to the challenges of the other Gulf states and other petroleum exporters as to what is the rightful price. And that becomes an issue later on. But that I'm not really worried about. What I'm worried about is that as these negotiations ensue, the Gulf states will need to receive guarantees that the strait is not going to be used as a political weapon by Iran and everybody else, but mainly Iran, in order to create these difficulties and hijack all kinds of negotiations. The Gulf states do see it as an issue. Yes. The other matter is, of course, Iran is going to be able to export a lot of oil, so they could buy American soy and soybeans for the short term, but then eventually they will get the upper hand in getting other goods from China and India, where they do have negotiated bilateral agreements exporting oil in return for medical goods and other equipment that the Indians and the Chinese have been very good and adept at negotiating during this turmoil.
Unfortunately, John, we're out of time, but we really do appreciate your insight. Nada Habibi, William Lee and John Safkianakis, we really do appreciate your time, your insight here on Counting the Cost.
Thank you.
And that is it for our show. You can get in touch with us on X at @TomMcRae_NZ. Do use the hashtag AJCTC when you do. Or you can drop us an email. countingthecost@aljazeera.net is our address. But there's more for you online at aljazeera.com/CTC. That will take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. Well, that is it for this edition of Counting the Cost. I'm Tom McRae from the whole team. Thanks for joining us. The news on Al Jazeera is next.